Welcome to Markets Now. I'm Rochelle Rook along with Joe Vaclacik with Standard Grain, and we do have livestock to the plus side right now. The row crops are lower and wheat is mixed. And let's talk about row crops first of all. A lot of this is just a weather play, isn't it? We've had a little bit of a change in terms of more favorable conditions, Joe, for planting in at least part of the Midwest.
I think the trade is reading the weather forecast as a bearish item, at least for the moment. Big picture, grander scheme of things, are we going to see more prevent plant or less corn acres in the Dakotas and Minnesota because of the snow and the long winter? Maybe that's a possibility. I think that's a real possibility. I've heard that from a lot of people. But at the same time, you look out into next week, it's a dry forecast for just about everywhere. Central Corn Belt, Western Corn Belt, Northern Plains, warmer temperatures on tap. You should see most of the Central Corn Belt in the 60s or 70s, if not 80s, by the middle part of next week. So there's going to be a planting window. And I think that despite the issues in the north, the market is reading the forecast as a bearish input here.
So what are your thoughts about whether we can get 92 million acres of corn planted and how much PP we do have up in the north?
I take the under on 92 if I had to bet on it today. That being said, I've heard a lot of variable reports. I've asked farmers from those areas for reports. Some people have told me, Joe, prevent plant and a lot of it is a guarantee. Other people have told me that it's too early to tell. So I don't know exactly where I stand. I'd venture to say that USDA is going with the idea that you're going to see very minimal prevent plant in those areas. And I think it's going to be above minimal and probably what would be above normal. It's a question of by how much and what changes between now and the time these crops are ultimately planted.
Yeah, and it's really too early for the corn market to care yet, isn't it?
Yeah, the corn market is typically pretty slow to react to planting delays. The example that sticks out in my mind was 2019 when we had historically late planting across the Corn Belt. The market was pretty late to recognize that. Here in early April, it's not something the market's going to get excited about.
Soybeans also trading weather, or are we trading, the fact that we had kind of poor exports this morning, or what is it?
Exports were not good. Sales were way below expectations and soft, and they're not supposed to be great this time of year. This is Brazil's time to shine when it comes to exports and shipments and that sort of thing. This is really our window in terms of corn, and we saw a good corn number today. So when you look at the soybean market, I mean, I don't know. I guess it has to do with maybe the export sales report. I don't really see anything overly bearish, though. I mean, you've got a really tight old crop balance sheet. You've got the potential for a really tight new crop balance sheet as well. If you're to take USDA's acreage numbers at face value, I don't really have much of a reason to believe that soybean acreage increases much versus intentions. Beans just don't make money for a lot of farmers at these price levels. But yeah, there's definitely some selling pressure here.
Yeah, and it looks like we're back under $15 on May, below the 100-day moving average, but it doesn't seem like we stayed there very long.
No, and 15 is not a bad price.
No.
If you look at the board prices, at least, that have been available to the farmer for this marketing year, I mean, anything near 15 is fantastic. So, I mean, these are not bad prices. We've just backed off a little bit.
Yeah, and then maybe you're also seeing a little selling. You're going into a 3-day holiday. You got the WASDE report coming up, so that might be part of it. But let's talk about the WASDE because we had very tight quarterly grain stocks. So how does that get put into the ending stocks balance sheets now for both corn and soybeans?
USDA doesn't have to make an adjustment. They probably will, though. They'll probably reflect those tighter stocks in maybe residual use in beans, maybe feed use in corn. You may see a slightly tighter old crop carryout projection for both of those crops on the U.S. balance sheets. April report's not the biggest one in the world. I'm not going to say it can't move the markets. The bigger report is always that May report. That's when you get your first look at the new crop balance sheets and USDA's kind of early thoughts there. They incorporate the March 31st acreage numbers. Also next week, look at the South American production numbers. I think the trade will be very interested to see what USDA does with Argentina in particular. They're going to come down without a doubt. It's just a question of by how much.
Yeah. Speaking of Argentina, they've re-implemented their soy peso program. Is it having any impact on soybeans?
Argentina's got a million and one economic problems, so they're trying to generate cash. Farmers and exporters, essentially what they're doing is they're hoarding product, whether it's beans or meal or oil, as a hedge against inflation. The inflation rate there is astronomical. You think we have inflation here. They have real serious inflation in Argentina that just seems to be never ending. So they want to pay the farmer more to generate cash. They've got all sorts of issues with the IMF and things along those lines. I don't think it's a big deal. I mean, think about it. They've got half of a soybean crop this year. Maybe there's some old beans floating out there. Maybe there's some meal floating out there. Argentina is going to have to import a whole bunch of soybeans from Brazil just to keep these processing plants operational this year.
And the wheat market, we're trading mixed here, and it looks like we're trading weather there through maybe the spreads.
I don't think we're trading weather
You don't think
at
we are?
all.
Okay.
No, I don't. If we were trading weather, you look at the drought in the Southern Plains, which has been going on for months and months and months and months. I mean, it's a never-ending drought in places like Western Kansas and Oklahoma and Texas. Crop ratings are the worst in 25 years. The market just doesn't seem overly excited about U.S. weather. The big thing for me is that we just don't have a demand base on the export market. U.S. wheat is drastically overpriced when you compare it to maybe Russia, who's the world's top wheat exporter. We are way overpriced compared to Russia. We're not doing any export business. So I guess the fact that we just don't have that export demand base kind of trumps the poor weather, at least for the moment.
Yeah, when you talk to producers in wheat country, they feel like we have no weather premium in that wheat market, to your point. Okay, cattle market, boy, gap higher opening, new contract highs, chasing this higher cash trade. This market's just on fire.
Yeah, I really don't have anything bad to say about it. I mean, we know the fundamental story. Sometimes, just to play devil's advocate, when it feels like a market's unstoppable like this does, sometimes that means you're approaching some sort of high, in my experience. I don't know if that's the case or not. I mean, the fundamentals are fantastic. Cash trade in the upper 170s. One of the arguments that I've heard is that, these box beef prices are going to get high enough to a point that they deter demand. I just don't know if I see that. I mean, everything is so incredibly expensive at the grocery store now. You get down to the consumer level. What's the one thing that they probably don't mind paying up for? It's probably beef, right? That would be my thought. So I don't know if I buy into the demand destruction story. It's an awfully strong market.
Yeah, I'm with you on that. We haven't seen any evidence of it yet. And the supply side, cash prices in the north, the highest, I think, since January 2015.
Yeah.
We're not even into the tightest numbers yet.
No, it could get much tighter. You're going to see, I think some of these areas were record high cash cattle prices. I know some of the futures prices, some of these feeder cattle contracts were really close to all-time highs. So this is a really tremendous deal. And it was actually, I don't think this is shocking to people in the cattle business. I feel like this was well telegraphed to some extent. I mean, you can never predict what the market's going to do. And in hindsight, of course, it's easy to look at it and say, oh yeah, I know why we're here. We've got tight numbers. It's never that easy in real time. But, all the signs were there, I guess.
You bet. Thanks for joining us, Joe Vaclacik with Standard Grain, and that's Markets Now.